Stock markets hitting another record high today. Looks like investors not worried about an economic impact from the US government shutdown. What should we be paying attention to, though, here? Tariffs, inflation, interest rates, the AI frenzy? We're joined now by Greg Halter, Director of Research at Carnegie Investment Counsel. He's also got some stock ideas for us. Greg, thanks very much indeed for joining us.
Thanks for having me, Andrew.
What's the big thing driving stocks to record highs, do you think, if you could boil it down to one thing?
Wow. I'm not sure there is one thing.
Mm-hmm.
I will point out that there's a lot of cash out there. Money goes into 401ks every 2 weeks. There's $21 trillion in money market funds, demand deposit accounts here in the U.S. So not that money goes into the market, but it's there. Margins are high and going higher. You've got this AI potential bubble, but a lot of money being spent there and everyone wants to be involved.
Does it look like a bubble, do you think? Is there going to be money lost here?
Well, no doubt there will be money lost in some instances. You see that in every case, but there'll also be big winners. There's already been big winners. This is something we have never seen before in terms of the volume of dollars that are going into this. It's kind of mind-boggling and makes you shake your head where all this is coming from and where it will eventually end or lead to.
Yeah, but when you think about it, hundreds of billions of dollars on these AI data centers, to justify that, presumably extra corporate profits are required. But will AI produce those extra corporate profits? Where would that money come from?
Well, that is certainly the question. I mean, I can say that if you look at the operating margins for the S&P 500 companies, they're at record highs and going higher. So that's certainly a good support. It's very hard, I think, to measure if companies are making money or saving money or both from the AI. I mean, if you're reducing costs through AI, that's as good as making money. Yeah. So is there really a difference? But how do you measure that? That's the hard part.
I guess the question is, how many people will have to be fired if AI is really going to bring down costs?
Potentially. I mean, there's always new jobs that get created, though. In every instance, going back the last 100 years, when new innovation comes, there's something that comes along that needs people to be able to man those jobs.
Yeah, that's interesting. The Guardian newspaper of Britain, which can be a bit left-wing, says there are thousands of lowly paid serfs who are training Google's AI. So at least some low-paid jobs are being created anyway. You have some stock ideas for us. You like the look of TradeWeb Markets, TW. It provides electronic marketplaces for rates, credit, equities, and ETFs.
Sure, we like this name. We do think that the electronic trading, especially on the fixed income side, money markets, which is not as widely developed as it is for the stock market, is a trend that has long legs. We're probably only maybe 30% penetrated. The stock's dropped about 30% here in the last several months for no reason, no fundamental reason, at least that we're aware of. Some of the other financial names that we look at as well are down. And really, we don't see a fundamental reason for a 30% drop. It's not like their business has declined by 30% in the last couple of months. So we like this name. The valuation is not especially low, but they are growing at a very nice rate.
Post Holdings, they're in cereals. They're also in food service. You like the look of this one?
We do, as a fundamental company, very solid. They run the business like a private equity opportunity. They spun off companies in the past like Bellring Brands, may do something like that in the future. They're also on the food service side through eggs and refrigerated products. Consumer staples names have not done very well because everyone seems to be flooding into the AI stocks. So this one's kind of been left behind, and we think the valuation here is attractive currently.
And then finally, AbbVie, a pharma name that's catching your attention. Why is that?
Sure. And again, I can't say the stock is a value at this level because it's actually done very, very well recently, including the last week or so. But they've become the poster child on how a pharma company can replace a product that's coming off patent. They have Skyrizi, Humira, Rinvoq, and other drugs as well. They just had some news earlier this week as well as on some approvals. They've done a very good job in terms of the pharma space where others have not navigated the rough seas quite as well. And we continue to like it fundamentally.
What is your view on healthcare investing in general? Are you attracted by the health insurers as a group or the hospital operators?
I've noticed some of the hospital operators have actually done very well in the stock market. The insurers have been tough, as we've seen with United Healthcare and so forth. We tend to like the equipment names like a Stryker or a Steris or an Abbott Labs over the pharma names. It's been a very tough area to invest in the last couple years. In fact, I believe NVIDIA itself is close to having a market cap same size as the entire healthcare sector.
Wow.
It just shows you how low that sector has become in relative importance to the overall market. Very, very interesting tidbit.
That's amazing. It's such, I forget what chunk of the US GDP healthcare is, but it's pretty substantial and among the highest in the world. That's incredible that NVIDIA at around $4 trillion has grown to that level. Greg, we better leave it there. Thank you very much.
Thank you very much.
Greg Halter, Director of Research at Carnegie Investment Counsel.